The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour at TFN. Good to be on back here. I had a great event out in Boston. Went out there and had the Nadex event, and we went in and got to meet a bunch of TFN listeners out there talking about Nadex and binaries, spreads mainly, focusing on that quite a bit, going into a lot of trading concepts about bringing together the three pieces of trading with strategy and system and style, and making sure you have all three of those pieces in place and not just trying to rely on one of them. And in addition to that, we were able to go into risk management, talk about timing trades, trade setup. Tommy went into patterns on volume, when to expect that volume to continue and break down, and from stocks to forex to futures. I mean, all the way around the bend, but I put a lot of stuff together, and a lot of people got to learn a lot of new things about just ways to look at the market. Plus, they got to see some different ways to trade the markets on Nadex. Let's go ahead and check out where the market's at right now. We got the S&P up just a little over 2 points right now. We have the Nasdaq up 8.5. The Russell's up 0.5 right now, with the Dow down 18. Gold is down 2.6, with silver up 0.017. We got copper at 0.0075, and oil is down 90 cents. Oil getting slammed on the day at the moment compared to previous day's close. I did just do a little bit of a rally right there, but it's pulling back right now at the moment. And looking on over at corn, it is up 20 points, moving big right there. We got soybeans up 17.5. Euro dollar sort of quiet today at the moment, down about 17 pips, with pound dollar moving on down 73, and Aussie dollar down 78. Euro yen is up 20 pips on the day, with pound yen down 24. U.S. CAD up 2, U.S. yen up 32, and U.S. franc is up 11 pips on the day. So that gives us our current market wrap. Any major news come out over the weekend while I was out in between shows? Let's go ahead and look at that and see what is coming up this week. So things that you need to be aware of, where you need to be looking both ways before you cross the street. And, we had Bernanke come out. He had his nice little speech at the end of the week. S&P's basically been in this big consolidation zone around these new highs. And we also had the employment change and unemployment rate on the USD CAD. That one came out Friday morning. So for a quick recap, let's look at that. And pulling the charts up right now. We got the pound dollar, by the way, sitting perfectly at a -1 deviation. That's what we expect each and every day. We expect at least 70% of the time it'll basically move 1 deviation and stay within that range. And but let's go ahead over now and let's look at Friday, the impact on the employment change reports. Unemployment rate was flat on the USD CAD on Friday, but then it actually came in, the employment change number actually went down, lower than expectations. And so what impact did that have? Well, that report came on out at 8:30, as you can see, when the market decided to start moving over here on the USD CAD. We got a big move, and the CAD got weaker off that news, hence the USD CAD went up. And it was sitting right at about a 0.7 deviation level before that. It shot on up to, it literally busted 2 deviations. Already had a little bit of, weakness in the CAD, strength in the dollar going on after bouncing off that settlement in the overnight hours. And but it just kept pushing on up, and you can see it went right here and stopped right at 1.5, pulled back down, went on back up to 1.5, chilled out for about 30 minutes right there, moved on up, used this 2 and 1.5 deviation level as basically a swing trade zone for a while, and spent a good majority of the afternoon right there at 1.5 before pulling on back and settling on down right at 1 deviation. Again, that's what we expect to happen each and every day. And so it's interesting just to watch it play out like that. And now 1 deviation, now you always want to remember, like plus half minus half is 2 halves, even though it sounds like 0. But it's a 1 deviation move from top to bottom, okay? So if we go to a half deviation, this time we actually went to about 0.7, but we pulled down to a negative half deviation, that would be considered a 1 deviation move. And so we did have a move on up to half a deviation. It was pushing on up. As it started pushing back down, really how far should we expect it to go at most? We should expect at most really a 1 deviation pullback. Can it go further? Of course, it can go 2. It can go 3 deviations. 3 deviations would be 99.7% of all expected movement in a day, meaning we don't basically only think there's a 0.3% chance it'll break out of a 3 deviation move. But these are areas where we may take profits, we may tighten our stops, and they become very objective methods. Not lines we're drawing, not things we're doing, but literally not looking at historical price action, but it's how far the market says the market could move. And these areas should be should be expected to be really pivot areas. So, I mean, you can see easily, the pivot area right here on this deviation line. You don't get as much, but you can definitely tell how strong it was because it had to pull back. Moved on up, pulled back, moved back up, pulled back, and literally just oscillated there, and then right down to that point. Well, it moved up here, look what happened. Stops, to the tick. Pulls on down, right back up, stops, hangs out there, tries to reach up, and literally just hangs out here for about, 3 hours before it moves on back down to settlement, comes on down to half, pivots right on back up, and now just hanging out at settlement. So, I said no big surprise there. And we should expect that to happen consistently. And it's nice when you have those expectations. Like I said, it doesn't tell you what direction the market's going to go. It just says how far you should expect the market to go when that does take place. So right now, today, no major expectation there on the dollar franc. And we'll go ahead and pull up the dollar yen. And I've got to redraw my lines there on the dollar franc so we can get that one up. And let's see here. So on the dollar yen, we got to move up to about a half deviation in 0.7. Early in the morning, there was that big gap. And the market gapped on up and went back down and filled that gap. Those are really the only gaps I ever look at playing, by the way, on FX, is Sunday gaps. And so that's something you could check out as a possibility, something that you could look at possibly trading. Now, gaps are always scary because you never know how much higher they're going to go. I mean, if you fade this thing right here, and it flies on up to this point, that's a solid 30, 40 ticks. And you're only going for maybe 30 ticks, maybe less. So, but you could have went short and actually been profitable in the trade without getting stopped out. So it's a cool way to check out actually playing, like I said, gap fill trades on the dollar yen. And let's see here. Okay, so I've got my lines drawn all in on the dollar Swiss. So we can go on back to that one now. Let me pull that back up. Dollar Swiss. There we go. And it stayed right in the 0.5 deviation levels on the day for us. So nothing, nothing major like most of the FX pairs, but pretty smooth, easy, and it's bouncing right off the levels. What about our more major currencies? We got euro dollar. So it's also stayed inside the half deviation, but look at that. It's perfect swing trading. And if you want to swing trade FX, you think these are solid support resistance zones, maybe they line up with confluence of Fibonacci levels that you use, support resistance that you use, you put deviations on top of it, and you go up, you could sell. When it comes back down to these areas, you could buy back, then you could sell, then you can buy back, and then you can sell. So you can swing trade with Nadex, and the deviations can help you have levels at which to actually do swing trades. So if you are a swing trader, that'd be something that you probably would enjoy quite a bit. And like I said right there at the beginning of the show, we got the pound dollar down right now, showing a lot of weakness compared to the other pairs right there, down at -1 deviation. And we did finally figure out how to work out the cross-currency deviations, so we'll probably be having those added on very soon. And in addition, we are working on, and we ought to have this uploaded this week, we're going to be adding in a binary scanner. So can't wait to get that piece going. And a little sneak peek here for you. But what it will do is it'll allow you to go in and filter and sort by all the different binaries, all the different markets. And we're just basically, we've got the filters built. Now we just got to turn them on, and it'll start filtering stuff down for you. And you can go in and choose how long you want and what your risk reward is, and you can build strangles, and you can build butterflies, and you can find the at the market spreads. And so there's a lot of different things you'll be able to do that'll make it very easy, very simple to trade the binaries. And then of course we'll add in the plugin where you'll be able to click the buy or sell button, and it'll pop up the window for you in the Nadex platform. And lots of other cool upgrades and features we keep adding in to those scanners to help people trade them more effectively. Now let's go in and check out a couple other pairs. Let's see here. We got the euro dollar, pound dollar. Let's check out the Aussie dollar. It's had some decent moves. It's already down 1 deviations. It's pushing on down to 1.5. And we got to move on down here to 0.5, 0.7, oscillating between those points. Finally decides to break on down, hits the 1 deviation, bounces back up a half deviation, and now moving on down, and literally just a matter of a few ticks away from 1.5, so which would put it at around 80% of expected movement on the day. You can see yesterday, Friday there, it moved on down to 2 deviations before pulling on back, and day before, Aussie's really been moving down to 2 deviations again, and that's they really don't expect that to happen, but that's why we have the levels in there. So if it keeps going, you just keep trailing your stops. And we can see right here, just moving down, and again, I like to look at usually 10-minute bars for using the trailing stop method I use when I'm trading these, and can be very, very helpful and give you a very simple method when trailing the stop. So for example, if we just pull up, any one of these days, but right here you go in, you go short on the pullback. So right here you get in, it's coming on down, it closes below a deviation, you tighten your stop to 5 ticks above. Comes on down here, closes below this deviation. I do consider settlement as a deviation level. Moves on down, closes down below this level, tighten it again. So it makes it very simple. Close. Now here's a nice one, closes above and then back below, you can tighten it again. Plus this deviation actually crossed between 2 lines. This one bar right here crossed between 2 of the lines, and so it helps you lock in that profit. Market moved on back up. Really, this was right at the end of the day. So you probably would have closed out. I like to follow the pit hours when I'm trading FX, and so I would have been out at 3 o'clock, and which would have been pretty nice. So if you're trading Nadex, you don't have a choice. That's when they close on down. But it would have got you out of the trade just based on the close right there of the pit right there. So right near at the low of the day, but the deviations helped you hold on because it's, so many traders I hear, they take their profits and they don't let their profits run. So you want to let your profits run. The only way you can do that is have an effective trailing stop method. And because if you just go, when it hits this, I'm getting out. No, there's nothing completely wrong with that. That's easier. It's easier to manage while you're away. And I think that's it's a wise choice if you're ever going to step away to have a take profit point. So that way you don't give it all back. Or to have some sort of like trigger method, whether you're using Thinkorswim or Ninja or whatever, that, hey, when it hits this point, then submit this order at this price. So if you can do more complex order entries with your platform, that's good. But if you're intraday trading, if you're watching it, then you definitely want to have a trailing stop method. Let those profits run, and be realistic on that. Don't keep them so tight as to get yourself knocked out. Don't make them so loose as to give everything back. And make sure they're objective and not P&L based. That was one of the biggest things we talked about. We're talking about profit and money management, risk management. This Saturday I was going, you have to have an objective method. Hide that P&L. Don't risk more than you can afford to lose, okay? Like, without messing yourself up mentally. I'm not just talking about, can you afford it? Can you psychologically afford it? If you can do that, then you got to be able to turn your P&L off and trade the chart. If you can't, you're probably trading too much. And you're costing yourself a lot of money. All right, well, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're flipping on through the charts to see in the market activity that's going on, and let's go ahead and take a peek at the indices. So right over here at the S&P, and I don't even know, let's see here. So right here on the S&P, what we can see is we got several charts that we can do, but it moved on down to half deviation, pulled on back up to settlement, and what else does that mean? New high again. So moving on up there. And, if we check out, the DOM or whatever else here, I can pull a DOM off, and let me unlink that, and I'll put it on over to the S&P here. And we can see nothing major telling in the volume, and it's always good, especially if you're trading futures. Even, ETFs and stocks, there's different ways you can do this. Basically, it's level 2 quotes, where you can see where people are putting their bids and offers in. And the big boys are looking at it. You probably should be too. So, and it can give you distinct advantages. Like you don't want to have, your stop on the wrong side. You don't want to be in the front of the line where your stop loss is. You want to be in the back of the line. And I don't mean as far as like order of getting filled. I mean, if there's 3,000 orders at one price level and it has to break that, and that's a big number, and you're right in front of it, well, the chance of you getting hit is pretty high. But if you're right behind it, it may be harder for you to get hit. It may be able to go up and bump against that level and then fall back. And same thing, you may not want your entry right in front of it, because you don't want it to hit that bump level and then fall back. You may want to be on the other side of it. So using that DOM can help you, and that's one of the reasons I'll actually move a stop. One of the few reasons I'll ever move a stop in the wrong direction is because I'll see a very, thick DOM order that says, hey, you know what? There are a lot of orders here. Let's get behind these guys. If they don't get filled, we don't get stopped out. It's not about profit and loss. It's not about I don't want to win. I want to win. I don't want to lose. Things like that. It's just that's what the orders tell me. That's what the volume tells me. That's what the charts tell me. They say, hey, this is a bad idea to have your stop right here. You should have it a few ticks higher. And I even use that for doing like trades on Nadex. So I did a premium collection trade the other day. Let me see here if I can find this. It's like right here on this trade. Let me show you this. I was looking at this, and the market was at its new high over here, 1621 the other day, and it was literally trying over and over and over again to hit 1622. It spent several hours trying to hit that level, could not hit the level, could not break the level. And earlier today, there were like 5,000 contracts here. Okay. And it's 5,000, 4,000, 5,000, 4,000, 3,000, 4,000, 5,000, well above any other level. And so, I would not want my stop loss to be like right here, 1621.75. So I'd probably want it 1622.25. I'd want to put it a little bit higher if I had a stop loss right there if I was going short, because I want at least all these guys to have to get filled before I get stopped out of my trade. If I'm going to get in a trade and my trade says buy at 1621.75, I'm like, you know what? It has to fill all these guys' orders before I can make anything. I might want to go ahead and give up a tick of my profit and just get on the other side of that line and make sure the crowd is flowing with me. Make sure I'm in the direction of the momentum and not like right where everything's about to do a U-turn. And so you can use that for your entries. You can also use it for stop losses. You can also use it for different trading strategies. Like I went in and I sold an in-the-money binary right there, expecting that it would not hit it, and put this in a few minutes before expiration. And I basically was doing some premium collection. So there's a lot of cool ways to use a DOM trader. And if you have never used one, it's one of those aspects you probably do want to learn how to use, because it can help you in finding specific price points and what's going on at that moment in the market. So anyways, we got the S&P moving on up right now, pushing on in the positive territory, and it worked pretty hard to get up there. We're going to see if it can stay up there for the day. And it's each time it's come up, it seems to give quite a bit of that back each and every day. So we'll see if it's able to keep it up today, or if it's going to give it back again. We saw it give it back, and then it rallied back at the end of the day on Friday. Day before, on Thursday there we saw make all that money and then give it all back. So I'm just curious to see if it actually can hold on to it this time, or if it's going to get back a bunch of points as we get closer in there. But I would be a little cautious about just going all out long right now at this moment. Looking on over at the Russell. The Russell already broke those highs, pull it on back now, back below settlement, and it's heading on down. Hasn't really hit a half deviation either way. And we go on into the Dow. And we'll see on the Dow, it bounced off settlement, didn't really break through with any kind of strength. Went up there, just pushed on a little bit and pulled on back, so it's not showing any strength. It did not make new highs today. And if we go on down to the NASDAQ, we'll go to the NASDAQ when we get back, right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just looking at the NASDAQ right now, it's working on pulling on back at the moment along with the other indices. So we'll see if they're able to, like I said, sustain the early morning rally. It may not look like a rally totally if you're looking just at a net day. And like I said, looking over at the ES as well, pulling that one back up, sitting right there at 1630.5. So we'll see if it breaks down below settlement. We got NASDAQ pushing down. We got the S&P pushing down. Both of those are above their levels. If we go back over onto Russell, it's already broken below its settlement price, and the Dow really never went above it. So you got indices really going in, not having the same strength and resilience and direction and everything else. That makes it a little bit of a choppy day on the indices. It can make it difficult to trade them, and that's why I like to have variety. And hard part about that is people go, well, I don't know Forex. I don't know commodities. I don't understand all that. On Nadex, they all work the same. Every single cent, pip, tick, whatever you want to call it, is worth $1, which is always the last digit it's quoted in. So whatever the last digit it's quoted in, $1. And that's all you got to do. So, I mean, it's very, very simple and doesn't take a whole lot to get used to, learn how to trade it, and you can definitely take advantage of that. Now, let's go down. Let's check out our metals and see what we got going on. We got gold on over here. Gold just sort of quiet today after the massive sell-off. It had just a big 2 deviation move. right there. You can see where it moved on down here to 1418.4. So it was pushing. Didn't quite get there, but it was pushing a 3 deviation move. And that's a solid sell-off right there that would have been a nice one to take advantage of. So I hope you caught some of that on Friday. And going on in, let's see, when did that hit that low right there? Right about 10:30 in the morning before it turned around and just flew on back up. Look at that. I mean, you had 2 great trades. So set right up for you. And looking on over at silver, so let's check the silver contracts. And silver sort of did the same thing, but it's also very flat today after that big move. And we can go in, let's check out, what about our other metal there? We got our copper. So copper today, flat. So metals market, just nothing going on. Indices, nothing major happening at the moment. However, we got some ags going. And again, ags on Nadex work the same way. And check this out, man. This is corn this morning. And you can trade corn over on Nadex and on the spreads right there. So you can trade the binaries too, but I prefer spreads. And you can see this going right here, and market opens right up. Nadex, boom, long entry. And, trailing your stops all the way. And I mean, there's longs all the way up this morning, but, if you just do the breakout of previous bars high right here, you got a long there, you have a long right here, and you have a long right here, and you have a long right, that one actually I didn't get an entry on, so if I'm using 10-minute bars. And so trailing my stops, bar that closes above this deviation, bar that closes above, it closes below, and then back above, so I can tighten it up. And then we got another bar that closes above, so I tighten it up. And bar that closes above again, so I tighten it up. And bar closes down, up, just oscillating. So now it's chilling out. And one thing I have said before is, if it hits a deviation and you want to tighten it on half, I'd leave the other half where it's at. Give it room to do its thing. But if you want to tighten on half, you could tighten on half, like right there. And right, basically the level that hits it. And I wouldn't keep moving it up. Unless you're just really trying to tighten that stop on up. But I prefer to let the 10-minute bars do their thing. And, sometimes it can be a little nerve-wracking to give that much money back after you've made it. And, how much money is that? That 20-point move, that's $1,000. So it's $50 a point on corn. So if you started at 9:30, you're still talking a 16-point move. So not too shabby. So, $800 move right there on a corn contract. So we can't complain about that at all. And looking on over here, checking out soybeans. So on soybeans, what do we got? Nice, solid, good moves all the way. And notice we have our 5-tick stop, right? So we got a low below 1403.5, 1403, only 2 ticks. So if we go in, we had our same, long trend going on. Of course, you could way back here in the morning, but just being a little more realistic with your morning hours there and waiting on that 3-tick breakout. So, we can start here. We can start wherever we want to, but we could start here. You could also, I guess, go here. Let's see, 3 ticks. Nope. There we go. In, and another one right there. Okay. And we can go on over here. There we go. And so where are the stops all along the way? Well, you start out with below the low and just keep moving on up on every subsequent close 5 ticks below. Okay. So it closes above, closes below, closes above. All right, great. We can go ahead and tighten it again. So we tighten it right here. And on this deviation level, closes above this one. Tighten it again. Go for and look for another deviation close. This bar closes above a deviation level. Tighten it again. Comes down, this bar closes above a deviation level. Moving up. Just solid soybean and corn movement all day. Perfect chart. You can't ask for a better trending chart. Just smooth. Great pullback, giving you multiple entries along the way, helping you tighten your stops. And, of course, another method I use is I tighten my stops. If I hadn't already tightened them there because of a close above a deviation level, then I'm tightening them here on this low peak. So goes through, boom. So the low since the pullback, what low is that? That's right there. And you'll notice right here. So high has a lower high, lowest high since then. So really the same point. But so you got right there. A little bit sooner, but same point basically. And I don't have to wait till it closes. I can do it as soon as it breaks that high. And then this one. So drops down, pushes up. So I got another tighten stop right there. And then we can add to that. We can add, let's see, what else can we add? And there's a lot of things you can add. And you can add RSI divergence. So it's another method I love to do. So you got this, but you also, I mean, you could keep trailing that RSI divergence as high as you wanted to. Depends on how high you want to take that stop. I at least like to do it on the first one. If you keep doing it, you're sort of asking to get kicked out pretty quick. But, you know, if it's up and you're up a lot and you're wanting some sort of objective method, then you could do 5 ticks below every time, below the bar. Or, you know, the 8 EMA. So I'll go over here to indicators. And I'll go to data series. Okay, so let's see. Let's add on in the EMA. And there we are. All right. Throw that 8 EMA on there. And I like to stair step it. A friend of mine taught me how to do this. So it just makes it very visible. And then we'll make it a little bit thicker. All right. There we go. Now you can see a little easier. And so a lot of times I'll use the low of the bar or the low of the AMA, 5 ticks below that, as a trailing stop method whenever one of my triggers hits. So like, where do I put it at? Okay, where do I put my trailing stop at? And again, always trying to give as much room as I can to let the market breathe without giving it so much room that I just get myself kicked out of a trade. So like right here, you know, you could put it below this one. You could also put it 5 ticks below the low of this 8 EMA, whichever is lower. And, you know, you don't have to use the 8 EMA rule, but it does give me a method. And this one would, I mean, actually be lower than this. It'd be like right here. If I can get it to cooperate. So right there. And then this one needs to be 5 ticks below here. So it'd actually be about down here. And by doing this, it gives you, like I said, a very objective method to trailing your stops to, you know, maximize your profits. Let your profits run. And people just, they don't like to do that. You're so happy when you finally get one that's not beating you to death. You're just glad to get out. And it's not always the best move. So, you know, you need to have a plan to go, okay, what's going to happen when I'm actually right? What am I going to do? When I'm actually right on one, what do I do? And do you have that plan? And so, you know, do you have things like RSI divergences? And do you have, you know, sort of the apex, APEX, the pullback and entry right there? And like I said, that's what I use on pretty much all my methods right there. But, you know, you got right there, you got another divergence. So we're going down, we're plotting all these divergences we can find. And for it to keep being divergence, I need the bar to keep angling up. So we'll see here. What else do we got? And then right there. There we go. So wrong one. Right over here, up, up, and up. So if I kept trailing that the entire time, I would have got myself probably stopped out of the trade unless I used the 8 EMA. And that's the advantage, again, of the 8 EMA, is it gives me some room. So putting that on there, and I don't actually get stopped out on the trade with a pullback, and I can trail it over and over and over again, tighter and tighter and tighter each time. So the 8 EMA gives you a little bit more room, lets you trail a little bit tighter, but it also will push your stops further back. So it's, you know, that it lets you trail tighter on like the RSI like more often, again and again and again. But like I said, you'll give a lot of money back if the market does pull back. Now, when I say give money back, I mean give profits back, and I don't mean give all your profits back. And some people are like, well, I don't want to give back any of my profits. Well, if you aren't willing to give back some of your profits, you're going to be able to make additional profits because you'll have your stops so tight all the time that you're going to get kicked out. You know, using like the last bar is low, or 2 bars back, or 3 bars back low, you're going to get kicked out again and again and again and again. And you're going to be cutting your profits short. So, like I said, you need those defined, objective, trailing stop methods that you can use in each one of your trades so you can catch runs like this. You know, one contract, $800. And that doesn't include, you know, all the, like this one's $800. So this right here, I mean, that's $1,000 you're up on that one right now. This trade right here, so you're up about $500 on it. What about this trade right here? Right now you're up about $250 on it. So I mean, $250, $500, $800, $1,000. That's a good day. So, and that's if you're doing a full-size corn contract. You could do mini corn contracts. You could use Nadex contracts. So there's a lot of ways that you could trade it. Corn is a little nuts. I mean, it can move fast and it can be scary. And I do suggest you definitely at least start out, if not end with Nadex, or hedge yourself with Nadex. And, you know, it's it's just, like I said, it's a very simple thing that you can go in and you can trade, and has limited hours, so you're not trading all day long, you know, and so it's not one of those trades that you're going to go in and you're going to trade 24 hours a day. And you can even notice where, like, how sort of gaps between times and everything else is, you know, the markets get ready, they open up, and Nadex starts around, like, I want to say 10:30, they go to about 2:15. So you're about to wrap up your trades over here for the day no matter what. So probably won't get stopped out on the trailing stop. Probably will end up just getting stopped out on the end of day marker over here when it finally gets hit. Let's see here. What else can we check out? That takes care of our ags. That takes care of our metals. That takes care of our indices. Let's go ahead and check out our energies. So on the energy side of things, let's go ahead and look at natural gas. Natural gas is moving on up, having a nice solid trend early in the morning. Just pushing. Some big bars. I mean, a lot of chop in there. If you had like 5-minute bars, you'd be, you know, a little bit rough. But I mean, it's moving on up. Hits 0.7. Really hesitates up here. Okay. So you're getting the close. Let's see. What is that close? 3.967 close. 972. So that one does not quite close above below. And then it pulls on back down and just takes its time. But it literally comes back down, and you could say, you know, I mean, high to low comes right back down to settlement. Stops right at that deviation. And is hanging out right there. So we got about 0.7 move from high to low, and we definitely got a 1 deviation, you know, because we didn't quite hit the 0.5 down here. So about 0.3 to about 0.7. So that 0.3, 0.7 would equal a deviation. And we got, you know, you can see the deviation. We got a little more than a deviation from high to low yesterday, Friday, but it actually did move all the way down to the 1 deviation mark. And we can pull on up oil and check that out. So oil right here, we got moved down to 0.5, 0.7, sort of the similar move, not all the way back to settlement yet. But it looks like it might be trying. I don't know. Either it's going to really turn over in this flip, or you know, I mean, we're closer to the end of the day on the oil anyway. But I mean, that's pretty crazy little market to trade right there. But it's fun. It moves fast. I mean, you're talking, you know, $10 a tick. So I mean, you can go in and grab $1. You can grab 100 ticks. You can grab $1,000. You know, pretty quick. So of course you can lose it too. So you always want to again have that defined risk model. Whether it be just defined risk, or whether it be capped risk, you know, however it is that you want to do that. But oil's trying to figure out if it can go ahead and just bust on up and break that high from around 12.30 right now. And does it have the oomph to do it? And looking at the order flow, order flow's pretty balanced right now. So not too heavy on one side or the other, pretty equal. So not seeing just a whole lot of commitment on either side as far as the bid or the ask size. And, you know, bidder offers pushing it one way or the other direction. And again, looking at the DOM in order to see that right now, but not just seeing a whole lot of movement at the moment. Well, that wraps up our, you know, basically our statistical look at the market. Let's go ahead and wrap up our fundamental look at the market. And what we can see over here, and I'll open this up for you. We'll wrap on down. Let me go in, and I'll put the levels right here on TFNN so you can see them while I'm wrapping through the news. So what basically what reports do we have that we need to be aware of that are coming up this week? And let's see here. We'll do that right after the break. So we'll be right back in just a moment.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this business and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And like I said, it's got the market sign up there for what's coming up today with the deviation levels. Again, we update these each and every day on the website. You can go in and on TFNN.com, just click on Diagnostic Box Spread Analyzer and click on the button right there, get your free 2-week trial. You'll get access not only to the Diagnostic Spread Analyzer, but also the deviation levels for futures and Forex that we have up. And you'll get access to all the tutorials we have. So if you are interested in trading spreads or binaries over on Nadex, you'll have tutorials learning how to do that. You can ask me questions. You can use the live box spread scanner, and soon binary scanner coming too, as well as the deviation levels are available inside this. So hopefully that will help get you going, get you started. And you don't have to trade, 8 hours a day to trade these things. You can trade at night. You can put a trade on, and you can put a take profit on immediately afterwards. Leave it there. Let it work overnight in the evening. Okay, so you don't have to be sitting there to manage your trade the entire time. So it's all different trading styles. Maybe you're full-time. Maybe you don't have time to sit there and manage the trade. Well, now you can do it without having to worry about stop losses kicking you out, and you can put your take profit targets in, do your analysis, put the trade on. You can do weekly trades on the binary. So there's a lot of different trading methods you can do. It does not mean that you have to be a full-time trader. And even a full-time trader, I recommend, means 3 to 4 hours, not 8 hours in front of a screen. You'll end up giving it back before the day is over if you do that. So just, a few lessons. Hope that you're able to, pick up on those. And let's see what we got here. Let's check out just a few fundamentals that you may want to be aware of what's coming up in the next 24 hours. We really have nothing major happening tonight. We had the core retail sales numbers in the USD. They came out today. They came in as expected. They did revise down the previous number down to negative 0.5 from negative 0.4 this morning on the 8:30 release. And Euro group meetings are going on all day, so who knows what could come out of that meeting. So, just be ready for any kind of interesting news to be released out of there. And like I said, nothing major as far as this evening. As far as early morning hours tomorrow, we're going to have the German Zoo Economic Sentiment Report. That usually does have a bit of an impact on the euro dollar at 5 a.m. So that is a pretty high impact report. Obviously not the most important, impactful report. The more off it is from the expectation, the higher the impact will be. And but it is considered a heavy report. So I'd probably put it in the medium heavy, not so much heavy impact all by itself. And then Australia's going to release out their budget release. Wouldn't really put that in any rating whatsoever. That comes out at 5:30 a.m. in the morning. They're done. They're closed down. So nothing major there. Tomorrow we don't have much on the docket for the USD. Everything pretty much small and medium impacts. Nothing even major happening tomorrow evening. So what is happening this week? So, let's see here. We'll have some PPI numbers, some manufacturing reports come out. And I'm just looking forward to some major reports. I know we do have a few this week. It'll be a little bit later in the week, but it's just not as big of a news week. We do have our CPI number coming out on Thursday. So when that comes out, let's see here. Yep. So CPI number, that'll be probably the biggest reports. The building permits. After the last jobs report showed a decline in jobs for builders, construction, things like that. So people will be watching those building permits and to see housing starts numbers to see is that any indication of what's coming? Is the economy actually starting to slow down? And we'll wrap up with CAD will have 3 reports simultaneously. Should make a decent little Friday CAD trade. And then go into a preliminary University of Michigan Consumer Sentiment Report on Friday. So a very light news week, and which means no big surprises, but also means the moves usually can be a little smaller. So just make sure you're trading smart. All right, we all have a great day, and I will talk to you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.